At Staples Business Advantage, our team of experts can help you find the breakroom products to satisfy everyone's preferences, while AI can
suggest popular items, monitor stock levels, optimize pricing, and automate reordering.
AI can do a lot of things.
But I can never know the taste of a truly great cup of coffee. Sigh.
But you also can't get hangry.
This is true.
Let Staples Business Advantage use today's latest innovations, plus our team's experience, to make stocking your team's breakroom easier for you.
Sign up today and save 20%.
Staples Business Advantage.
Business is
human.
Shares for beginners.
As of June of this year, there are over 220 million users of cryptocurrencies or blockchain-based applications. That's up from 60 million just a year ago. So you can see the growth there. The growth of the technology is actually superseding the growth of the internet. If you take a look at when the internet had roughly about the same amount of users, I think it took about 10 years to get to 1 billion users. The expectation is that the cryptocurrency space actually ends up getting to 1 billion users within 4.5 years.
G'day and welcome back to Shares for Beginners. I'm Phil Muscatello. There's been a lot of excitement lately about crypto in general, with some of the gains and especially the eye-watering prices of some cryptocurrencies. But most people find this sector intimidating and confusing. What people may not know is that there's a whole ecosystem that sits behind these cryptos, mostly powered by blockchain technology. Many of these companies are publicly listed on stock exchanges, meaning investors can get exposure to the players powering the crypto economy. Joining me today is Justin Arzadon to help clear the air and explain the opportunities of crypto equities. Hi, Justin.
Hi, good morning, Phil.
And thank you for coming in. This is the first interview face-to-face, not over some sort of online tool. So it's great to have you here in the studio live.
Thank you very much for having me. Very excited to be here today.
Justin's the head of digital assets at BetaShares, where he educates and informs clients about this emerging asset class and contributes to development. So tell us about your time working in ETFs. It's been 15 years?
Yes, that's correct, Phil. So 15 going on 16 years, kind of lose track of the years after you get above 10 years there. But so I started my career in Toronto, Canada. So I was actually born and raised in Toronto. And, after school, started working at a bank branch, so a retail bank branch. It was good to sort of be exposed, but eventually knew that I wanted to make my way into the funds management industry. And so eventually made my way to an ETF fund manager in Toronto there. The firm was called Horizons Exchange Traded Funds. And it was very early days. They actually didn't have any ETFs listed. They were running leverage. They
were an ETF provider without any ETFs.
Well, so they weren't an ETF provider. They were more of an index provider. Okay. Wasn't listed on the exchange yet, but they were index funds. They were actually leveraged both on the long side and the short side. So it started when they were about $100 million of funds under management. That continued to grow to about 600, 700 million. And eventually they decided to start listing onto the exchange and officially become an exchange traded fund provider. And so started with them in terms of really learning how to position exchange traded funds with financial advisors as well as with the retail investor, and helped grow that business to roughly about I think it was about $3 billion or $4 billion of funds under management before, unfortunately, I had to go to them and say, unfortunately, I need to resign because I'm going to be moving to Sydney. And the reason I came over to Sydney is that my wife, she's originally, born and raised in Sydney, and she wanted to be closer to her family. So I decided to make the jump and was offered a role with BetaShares.
Because of your experience?
Probably not many people know this, but not only because of the experience, but also Horizons Exchange Traded Funds was an initial minority shareholder in BetaShares.
Oh, okay. Yeah.
And so I actually met the co-founders when they came to visit Toronto. And, because I had, sort of the approval from the Horizons owners, Alex and David were kind enough to bring me on board.
Yeah, come and look us up if you're ever in Australia.
Yeah, exactly. And so what was quite interesting, however, is that when I left Toronto, the assets under management in all of exchange traded funds in Canada were roughly just under 40 billion. And coming to Australia in 2010, assets under management, again, for all exchange traded funds, were just under 4 billion. And so, you fast forward almost 11 years and, we're at 100 billion plus.
Yep.
And, I'm proud to say that BetaShares alone is now sitting over 22 billion of funds under management.
Yeah.
So, I've been able to experience the growth of exchange traded funds, not only in Canada, but also, now here in Australia.
So it's interesting, isn't it, how ETFs have grown over the last few years. It's been such an explosive growth because they do offer a lot of pluses like diversification, don't they?
Yeah, correct. So not only do they offer diversification, but I believe it's the transparency. So you know exactly what an exchange traded fund holds.
Yeah.
You can see the holdings on a daily basis. And actually even, for the domestic ETFs, you know what the actual price is at pretty much that second. So you get the diversity, you get the transparency, you get the ease of access. So, you're purchasing it essentially like any share. So, a lot of investors that haven't experienced using or trading an exchange trade fund most likely would have purchased, for example, CBA or, Westpac shares. And essentially the exact same way that you would purchase any of those shares, you purchase an ETF. And so, you have all the investor protections as well.
You contribute to the development of ETFs. What's that involve?
I contribute to the ideas for the development. So I've been a member of the distribution team, since starting with BetaShares. And being on the front line, you're speaking to advisors on a daily basis. And, they are feeding ideas in terms of what their clients are looking for. So, really over the last, call it year and a half, they've been actually letting us know that, what do you have in the, cryptocurrency space? Do you have a Bitcoin ETF? How can I get access? And, if it's not just myself that's hearing that, but it's my colleagues hearing that as well, then, the
light bulb goes
exactly,
on,
exactly. So, we have, monthly or quarterly product development meetings. And, we actually have to discuss, what type of exposures to come out with. And the thing is, we get approached all the time from other fund managers to either partner up or from our clients wanting to get exposure. But, you can't come out with an exchange traded fund for everything. You have limited resources, limited time. And, when you come out with an ETF, you want it to be successful, right? So, you don't want to come out with something and, it raises 30 or 40 mil. You want to hopefully make sure that it appeals to the masses and that you're raising, 100 mil plus, for example.
Yeah. So cryptocurrency, including Bitcoin and all the other coins, have been in the news a lot lately. Tell us a bit more about the crypto space as a whole. How does it work?
Yeah, so the crypto space as a whole. So when we talk about crypto, there's a lot of confusion because, people call it crypto, they call it digital assets. They might just refer to, I'm not into crypto, but I'm really into the technology such as blockchain. But however, I like to refer to it as digital assets because, there are cryptocurrencies that people are familiar with, such as, Bitcoin and Ethereum, with those two being the largest cryptocurrencies. But for anyone that's really been paying attention to the space, they have probably started to hear words or acronyms such as NFTs or non-fungible tokens. And so this is almost like the next level in the digital asset space. So I like to refer to everything as digital assets. But essentially what is happening in the digital asset space currently is I like to view it as there's almost a parallel financial system being built. And that's not to say that the current financial system is not going to have any involvement in that or that we're actually leaving, but you have to think about what the internet has done to various industries. So you take a look at, newspapers or media, right? How many people actually get newspapers delivered? Everything's delivered online. The internet has disrupted multiple industries. And for the most part, it hasn't disrupted the financial industry yet. And now, because of cryptocurrencies, because of the decentralized consensus mechanism that a lot of cryptocurrencies feature, we're essentially now able to get rid of, the middleman, and the middleman or the centralized figure being, the banks. Now, does that mean the banks are going to actually disappear? 100% they're not. I mean, they're just too big. So what is essentially going to happen, I think, in my opinion, is that they're going to evolve, they're going to develop, and they're going to build on top of these protocols, because that's all cryptocurrencies are. They're essentially software open digital protocols that is actually open to all. So banks, corporations, and other, developers, if you have an idea, you could eventually build on these open protocols.
I'm not sure how far down we want to go into the weeds here.
Yeah.
But just before we started recording, I mentioned that analogy about the soccer game and understanding how blockchain works, where I described how in a professional soccer game, you've got a referee, you've got line judges, you've got the videos, and the decisions on any aspect of the game is decided in a very centralised manner. Whereas if you think about a kid's soccer game, no one scores a goal until every kid on the block agrees that the goal has been scored. And then you developed that idea a little bit further in our discussion beforehand.
Yeah, that's correct. So, just from what you've said there, what that makes me think of is what they call as distributed ledger technology. Because the thing is, a blockchain can actually be private or public. So think about, the internet. There's the intranet, which, many may have had access to in their firm. If you're working for a corporate, you have the intranet. It's centralized. They were making the decision in regards to which websites you could use. However, if you want, something that's decentralized, you have the internet, which is open to all. So you have, multiple websites, and you can essentially search anything that you want. And that's the same with blockchain technology. They could actually be private or public. Now, blockchain is a great technology, and cryptocurrencies use blockchain, but blockchain is not what makes cryptocurrencies or digital assets interesting. I think what makes digital assets interesting and what makes them so different is the ability to come up with this decentralized consensus, meaning there is no one single authority figure to make a decision. And the reason it's able to have this consensus mechanism where everyone can agree is because you have what are called nodes, or call it users. So if you have multiple users, hundreds of people or thousands of people, let's say in many cities, in many countries around the world, and we've downloaded the software program, we can all take a look at and ensure that when a transaction comes through, it's verified across the whole, correct. Yeah. Chain, so it's verified. And then once it is verified, then, we can all agree, and then we can move on to the next transaction.
With Staples Business Advantage, you get the benefit of thousands of experts.
Plus optimizations powered by the latest technological innovations.
1 + 1 =
2.
3.
Whatever. Sign up today and save 20%.
Staples Business Advantage.
Business is
human.
So can you explain the crypto economy and how it all connects?
Yeah, certainly. So in terms of the crypto economy, it's all activity relating to the creation, transaction, and ownership of digital assets. Mm-hmm. And so, as I mentioned, you have digital assets themselves, whether it's Bitcoin, Ethereum, NFTs, or non-fungible tokens, rather.
We might have to explain non-fungible tokens at some stage.
Yeah, certainly.
Just so if listeners are just listening, because it's one of those terms that we hear a lot about, and a lot of jokes about it as well, that, people are selling 8-bit gifts, and they're worth millions of dollars. Anyway, sorry, back to your point.
No, I'll definitely expand on that. But you have the digital assets themselves on one side. You have the participants in the digital assets. So whether you're an investor, whether you're an institution such as a super fund or a managed fund, looking to invest, or you're a business, right? If you're a business that wants to accept cryptocurrencies for payments, so all of those are considered the participants. Now, in the middle, that helps facilitate both the digital assets themselves as well as the participants. You have the businesses that are in industries that help facilitate both sides. And without them, the crypto economy would be very, very difficult. So the fund that we just launched is the BetaShares Crypto Innovators ETF, which takes a picks and shovels approach, which is leveraged to the growth of the crypto economy.
So these are the companies that the fund is investing in as opposed to the coins or the cryptos themselves?
That's correct. So the fund itself does not actually purchase any Bitcoin or Ethereum or any of the cryptocurrencies themselves. It actually invests in the companies. I guess where I was going with that is that it currently holds 32 names, and these are the large cap companies in the space. So there's a lot more other companies. However, a lot of them are still in its infancy, and so we don't hold any of that because they're not really at sort of that level that they're really driving sort of the crypto economy. But the names that we are holding, some of them have been around since 2012, 2013, and they are really helping drive the crypto economy because, not only are they helping the digital currencies themselves, but they're helping the participants. And whilst you may have cryptocurrencies go through a lot of volatile periods, they'll continue to go up and down in price. And that's the thing, a lot of investors may not have the stomach to hold direct cryptocurrencies. We actually saw Bitcoin correct earlier in the year. It hit a high of about 63,000, I believe it is, and it actually came off to about 29,000. That's over a 50% drop, right? And that's a lot for an individual's portfolio. Now, through that period, you had companies in sectors that we hold, such as Bitcoin miners or exchanges and custodians or the asset managers, for example, that continued to have phenomenal numbers. And when I say phenomenal numbers, I'm talking about financials. So they continued to increase their user base, they continued to increase their revenue, and that's because digital assets themselves will continue to grow, even though cryptocurrencies may be going through a period where prices are falling. When you think about the report that came out a couple of weeks ago by Bank of America, they said that as of June of this year, there are over 220 million users of cryptocurrencies or blockchain-based applications. That's up from 60 million just a year ago. So you could see the growth there. The growth of the technology is actually superseding the growth of the internet. If you take a look at when the internet had roughly about the same amount of users, I think it took about 10 years to get to 1 billion users. The expectation is that the cryptocurrency space actually ends up getting to 1 billion users within 4.5 years. So the growth is going to happen regardless. We don't know which cryptocurrencies are going to necessarily benefit from all that growth. But what we are pretty sure about is that these companies that are helping both the cryptocurrencies themselves and the participants are most likely going to grow regardless.
So, Justin, tell us about a couple of the larger companies that comprise this index that the ETF's based on.
Yeah, certainly. Look, there's a few companies that come to top of mind right away. First off is Coinbase. Coinbase has been known to be the Google of cryptocurrencies, and we know what a powerhouse Google is. And what's quite interesting about Coinbase is that their exchange, so they facilitate the buying and selling of cryptocurrencies. However, they don't just do that for retail; they also do that for corporates, such as Tesla and large fund managers. So they're not just doing it on a retail level, but they're doing it, in terms of billions of dollars. Now, the thing is, they have other lines of businesses as well. So prime brokerage, as well as, they are being a custodian for cryptocurrencies. But this is why I like this exposure. And this is just an example here. In the second quarter of this year, we actually saw Bitcoin fall from $60,000 to $30,000. However, during that time, Coinbase, when you actually take a look at their financial statements, not only did they increase their transacting users, so they grew their client base, but they also increased the volume of cryptocurrencies that was traded. So this goes back to what I was mentioning before, in that even though cryptocurrencies are volatile and they're going to go through a lot of bull and bear type markets, a lot of peaks and troughs, as long as the cryptocurrency space continues to grow, the beneficiary will be a company like Coinbase. Another company that comes to mind is MicroStrategy. So MicroStrategy being run by Michael Saylor, longest running tech CEO of a public company. He likes to say that he runs a 500 million software business that grows 10% a year. And they run a $5 billion Bitcoin business that's growing upwards of 100% a year. So Michael Saylor started adding Bitcoin to their treasury holdings a few years ago. They've purchased roughly about $3 billion, and now it's worth over $5 billion. And it wouldn't be surprising to see, possibly the market cap of that company eclipsing, $1 trillion if Bitcoin continues to grow the way it has. Now, I won't focus on any one of the specific Bitcoin miners, but if you take a look at the index itself, we have a number of Bitcoin miners. And when you take a look at the performance of the Bitcoin miners versus Bitcoin over the last 12 months, a lot of the Bitcoin miners have actually outperformed the price of Bitcoin. And, when you try to delve into it and look at why is this, well, not only are they mining the Bitcoin, but they also don't necessarily have to sell the Bitcoin right then and there when they actually mine. And so they actually end up just holding the Bitcoin themselves. And as the price shoots up on Bitcoin, that's when they will eventually sell. And that all goes towards their bottom line. So whilst we have taken a look at the correlation of the index versus Bitcoin, the correlation being pretty close, it's not 100% correlated. I believe it's between, 0.7 and 0.75. But what we hope to see is that, even during sort of these periods where cryptocurrencies kind of level off and may pull back, these companies continue to grow. The reason why PayPal and Square are in the exposure itself is because we, as I mentioned before, 85% is invested in pure play companies. So pure play companies being companies that have at least 75% of their revenue, from their crypto-based business, or companies that have at least 75% of their balance sheet or their treasury assets invested in cryptocurrencies. Now that leaves 15% of the fund, and 15% of the fund is put aside for these large cap companies that are doing meaningful work or have a meaningful business line in the crypto space. And so an example of that would be PayPal and Square. Obviously they have their primary business, which because of the size of it, it's just that's where most of their revenues come from. But PayPal and Square, they're actually really starting to do some interesting work in the crypto space, and that business will grow, and so they get a small percentage in the index itself.
Yep, and PayPal have been around for how long now? That's I think it's nearly 20 years, hasn't it been? PayPal?
Correct, yeah. But it really shows, I think, the sort of staying power because they see the opportunity, essentially. They see the opportunity and what's happening in cryptocurrencies and how that's going to develop into essentially what I think are going to be faster payment systems than what they use in terms of the way that PayPal works, for example.
So why is the ETF not investing directly in cryptocurrencies themselves?
We feel that getting exposure to digital assets ecosystem through the companies is actually a great diversifier or alternative. Being in tune with the advisors and speaking to them about the space, there's actually a lot of advisors that don't necessarily want exposure to the cryptocurrencies. They're volatile. Their clients could be a lot older and their portfolio can't go through that volatility. As I mentioned, there's actually over 7,000 cryptocurrencies. It's actually hard to determine which ones are going to survive. When you take a look at the companies themselves, they're publicly listed. They come out with financial statements, on a quarterly basis, and financial.
They're all publicly listed.
They're all publicly listed, correct?
Okay, so very transparent.
Very transparent, and advisors actually know how to value these companies. Whereas when you take a look at something that doesn't have any cash flows like these cryptocurrencies, how do you actually value that? You have to start taking a look at network effects and that sort of thing. But there are a lot of investors, and when I say investors, I put financial advisors that are more comfortable in just investing in the companies because they feel that regardless of which cryptocurrencies win, these companies will be the winners in the long run because they help facilitate both the growth and just the development of the space itself.
Is the fund actively or passively managed?
Yes. So this fund is passively managed.
Okay.
The fund is passively managed because we are trying to track
You just track the index.
Track the index.
Yeah.
Correct. And in regards to the way that it is weighted, because you could have ETFs that track indices but weighted in different ways, the 85% of the fund is going to be market cap weighted. And so the benefit there is that the companies that continue to be strong in the space continue to grow, and you remain market cap weighted with a cap of 10%, but you remain weighted towards those big names. Now, that other 15% that I refer back to in terms of the companies, that have multiple lines of businesses, but only, at least one business line, those will be equally weighted. And so there will be 10 names that are equally weighted for that section there.
Okay, so let's talk specifically about the ETF. What's the code for this ETF?
The code for the ETF is going to be CRYP, or we like to, just call it CRYP.
In the vault with crypt. So what kind of investors is CRYP suited for, and where can CRYP sit in a portfolio?
Yeah, certainly. So I think for investors looking to invest in CRYP, I would classify the fund as a thematic. So BetaShares, for those of you that are unfamiliar, we're an ETF fund manager, 22 billion of funds under management, and have over 65 exchange-traded funds currently listed on the ASX. And we have a number of thematics. Some of those thematics may be, global cybersecurity or cloud computing ETF. And so when you think of thematics, they don't make up a big chunk of the portfolio, but we feel that, some of these thematics that I just mentioned are long-term megatrends, right? And, this sector, the cryptocurrency sector, is a sector still really in its infancy and is going to continue to grow. And so, it would be considered a growth exposure. It's an equity exposure. And really, it's up to, either your financial advisor or yourself to determine how much exposure you want, because, everybody's risk tolerance is different.
And of course, listeners should talk to a licensed financial advisor or professional before making any decisions that based on this. So where can listeners find out more about this ETF?
Yeah, for listeners that are interested in this ETF, the best source would be to go to the website, so betashares.com.au. If you are interested in the crypto space in general or the digital assets ecosystem, we're also going to be posting a weekly crypto insights and highlights, call it a letter, but it's posted on the website. And I'm actually going to be writing that on a weekly basis. And BetaShares also has their social media avenues. So, there's plenty of references.
And we'll put all those links in the episode notes and the blog post as well.
Yeah, excellent. No, that's great.
Justin, thank you very much for joining me today.
Thank you very much, Phil, for having me. I was glad to be here and always
live.
Happy to come back at any time.
If you found this podcast helpful, please tell a friend, especially if it's someone who needs to start thinking about investing for their future. You'll be helping them and helping me to keep this show on the road.
Shares for Beginners is for information and educational purposes only. It isn't financial advice, and you shouldn't buy or sell any investments based on what you've heard here. Any opinion or commentary is the view of the speaker only, not Shares for Beginners. This podcast doesn't replace professional advice regarding your personal financial needs, circumstances, or current situation.
And thank you for listening to my podcast.
With Staples Business Advantage, you get the benefit of thousands of experts.
Plus optimizations powered by the latest technological innovations.
1 + 1 =
2.
3.
Whatever. Sign up today and save 20%.
Staples Business Advantage.
Business is
human.